Now, Oluwaseun Adri joins us now to look at issues around Nigeria's tax administration and revenue generation. He's a consultant with Q Tax Consult and Trust. You're welcome.
Thank you very much for having me.
Okay, there has been this back and forth over the need to widen the tax net, though the federal government says that it wouldn't be increasing tax in a short run. And on the other side, the proponents of growing the SME sector have been calling for a deliberate effort to ease tax to encourage entrepreneurs. What's your take?
I would say increasing the tax base rather than increasing the tax rate is like the best approach in any world-class economy with respect to taxes. You know, I was opportune to conduct a research while I was in England on fundamental tax reform in Nigeria, and I advised strongly that Nigeria should not think of increasing the tax rate now. You know, rather I should think of widening the tax base, because a lot has not been gotten from the revenue, the rates we have at the moment. We don't have a large base. So you can imagine increasing the tax rate on those that are already complying. For example, majority of them the burden will be more on them because they're already complying. You're increasing the rate, and some of them will look for loopholes in order to reduce the tax they will pay. So it's not advisable for Nigeria to increase the tax rate.
So how do we now increase the tax base?
FRS has been making a tremendous effort on increasing the tax base in a couple of months since the administration of Babatunde Fowler. They've been able to increase the tax base and registered over 800,000 new taxpayers. However, that doesn't automatically turn into them paying taxes, but that's the first step, and that's the right step, you know, in the right direction as well.
Okay, considering the current economic state of Nigeria, do you agree with the IMF that Nigeria needs to do something about value-added tax, most especially on commodities like alcohol and tobacco?
Recently, you know, there's been an executive order that changed the value at the excise on taxes on tobacco and alcohol. However, that took effect a couple of months ago, so it's going to take some time for us to see the impact. Then we can now determine whether more taxes should be on these commodities. And you also have to think about the companies as well, because there are certain companies that are involved in this kind of businesses. So you have to be very careful not to kill those companies as well.
How long are we looking at?
We'll be looking at the new financial year, you know, looking at between when it started and a year after. Then we can start looking at how much impact that has made, the increase on alcohol and tobacco.
Okay, basically looking at imports, exports, and also excess tax, which particular area would you advise?
VAT is very big. VAT is enough to drive a large percentage of revenue we need in this economy. You know, however, the laws are quite stale. You know, a lot of countries are looking at how they can tax the digital economy. A lot of countries are looking at how they can improve collection of VAT. You know, Nigeria just needs to work more on have a better policy direction with respect to VAT, work on the loopholes in the laws. Because, for example, there are some non-resident companies that provide services to Nigerians, and those services are being consumed in Nigeria. However, some of them escape being taxed because they are outside the country, you know. And luckily for FRS, they were able to get a judgment recently, which said companies that provide services, non-resident companies that provide services to Nigerians must also pay VAT. So we need to be very holistic with our approach with respect to VAT. We need to build a more robust VAT system, and we need to work on the stale laws on VAT.
Considering the effort, are we actually on the right track?
Recently, there's been a proposed amendment to the VAT Act. However, I think there's still more that needs to be done in that regard, because I didn't see anywhere in the Act where they are trying to automate collection of VAT. You know, in the strict sense, you need a law to back collection of taxes, you know. And in VAT, with respect to VAT, for example, they have been trying a lot to automate the collection of VAT administratively, but in the strict sense, they need to incorporate it in the law so as for it to be very much effective. And I believe we'll get a lot of results from that.
Okay, what's your take on major multinationals with this habit of repatriating their funds without actually paying tax?
Yes, it's so funny that Nigeria is just waking up to the call that multinational enterprise have been shifting. There's something they call base erosion and profit shifting in tax. It's actually an instance where the tax base of Nigeria is being eroded by not paying the right amount of taxes in Nigeria and shifting of profit. For example, a company resident in Nigeria, instead of them paying taxes on the profit that they get in Nigeria, they shift those profits through various mechanisms to lower tax jurisdiction or to jurisdictions where they have little or no taxes, little or no economic activity, and they pay little or no taxes in those countries. So therefore, they rob us of the taxes that we're meant to get in Nigeria, and they shift those profits to other jurisdictions. But recently, FRS has signed a couple of agreements, and they've passed a couple of regulations, like the country-by-country reporting regulation, the transfer pricing regulation, which are going to curb these sharp practices, which has been happening over the years. And we believe from time we will start seeing the impact of those regulations that has been passed recently.
But should there be stiffer penalties for tax evasion?
As it stands,
especially by those multinationals.
As it stands right now, the regulation, the transfer pricing regulation to 2018 introduces a lot of very stiff penalties if the multinationals don't file certain returns, transfer pricing returns in due time. So we just have to give it some time. Let's see the impacts that this new regulation is going to have on this multinational. And also there is a new regulation called the country-by-country reporting regulation.
What's it about?
The country-by-country reporting regulation is the regulation that insists that multinational enterprises should file certain returns, based on whether they are in the country, based on whether they are in the country or outside the country. They are meant to file certain returns so we can see their financials, and the tax authority can conduct a risk analysis to see whether these multinationals are actually engaging in practices that are eroding the tax base of Nigeria.
Okay, casualization of labor. Does it have any impact on tax returns?
Casualization of labor in the strict sense doesn't have any impact on tax, because it's more of rather than making a staff permanent, you make that staff a temporary staff. The law is very clear, and it has imposed the obligation of deducting taxes from revenue of employees by employers. So it doesn't really have a significant impact on taxes.
Now, let's look at the MSC's sector.
Yes.
What really is the argument that tax burden should be reduced on the sector?
Okay, I'll give you a very practical instance. For example, you see, you're an SME, for example, and you want to pay your taxes. You're really willing to pay your taxes, probably because your profit is not so much. However, you have to employ the services of an accountant or a tax consultant, for example. And the tax consultant might be billing you because there are certain documents that you need to file, like your financial statement, your audited accounts, your balance sheet, and you might not be able to do it as not being a professional. However, an accountant might be charging you quite a huge amount of money, and let's say maybe it's charging you 100,000, whereas the tax you're meant to pay is just 30,000. An SME will be discouraged because you'll be looking at the profit he has made compared to the burden. So the burden of compliance is actually what is really eating really deep into the reason why a lot of SMEs are not paying taxes. So they have been clamoring for a special tax regime for SMEs. For example, with VAT as well, in different countries all over the world, they have a threshold. That's like if you don't pass this certain threshold, you are not entitled to file for VAT. But in Nigeria, it's not so. Immediately you register a company in Nigeria, you are entitled, and you commence business and you deal in vatable goods, you are entitled to file your VAT returns. So the burden of compliance is very huge on SMEs, and there are a lot of clamoring that we should have a special regime for these guys so that we can include them in the system and be able to generate more revenue from these guys.
Okay, how do we now align? Policymakers, on the other hand,
yes,
they focus on how to get something out of tax, and on the other hand, we have the SMEs that need a break to be able to grow. How do we align it to make sure the economy keeps?
Okay, the good part is that SMEs are willing to pay, from majority of people that I know that entrepreneurs, but they complain a lot about the burden. So it's just for tax policy makers to work on a very favorable approach for these guys to be able to come forward and pay the due taxes without having to burden them so much on the process to pay those taxes.
Okay.
So they need to bridge the gap, you know, and the taxpayers should be cooperative on their end, while the policymakers should also be ready to shift ground in order to make it easier for these SMEs to pay their taxes and to reduce the burden of paying those taxes on them.
Okay. Thank you very much, Mr. Oluwaseun Gadari, with a consultant with Q Tax Consult and Trust.
Thank you. Thank you very much for having me.